I'm going to take a big picture look at gold in today's video. So I think at this point I've become also convinced that this is probably the 8-year cycle top in gold. Now, I will say, however, I think this 8-year cycle may shorten a little bit. Typically, we wouldn't expect that final bottom until 2024, but because of the um, timing of the CRB's next 3-year cycle and the timing in the 3-year cycle in the currencies, I think there's a strong possibility that gold's 8-year cycle is going to bottom maybe in late 22. I know there's a lot of gold bugs that don't want to hear that. Gold bugs, they tend to be very impatient. They tend to be very emotional traders. They rationalize that the fundamentals are always, you know, vastly in favor of gold rallying, which, to be fair, most of the time they are. But as I've said many times before, this is one of the most heavily manipulated markets on the planet. And it looks to me like the advancing phase of the 8-year cycle has been aborted here. And then we got some other factors in play as well. So the really big picture, let me see if I can widen this some. We've got this really big cup, and this looks like what is going to be the handle forming. I was hopeful that we would be finished with the handle right here, and then we got a pretty nice rally, but it just didn't do what it needed to do to break out of this handle. It needed to come up here and make a higher intermediate high. It did not do it, and then we had the big attack on the June FOMC meeting. So I think the cartel has they've won this battle. I think they've stopped the 8-year cycle, and if you can take a longer term time horizon, this is actually really good news, and I'll explain why here in a minute. But in the bigger picture here, I think we're probably going to need another year of chopping sideways to eventually. I think we've got to break below this to have a 8-year cycle low. So I think we're going to have to go. We've kind of mostly been going sideways since March. So I'm going to say probably more sideways, give this 200-week moving average some more time to catch up to price. Maybe gold eventually has to tag this before the 8-year cycle low is complete. I do not think gold is going to move below this 1500 to 1550 level during the 8-year cycle low. So I don't think this 8-year cycle is going to come anywhere close to taking out this previous 8-year cycle low, which would indicate that gold is, in a secular bear market. I don't think that's going to happen. I really doubt that gold will even drop below this rising 200-week moving average during the 8-year cycle low. So now let me move to the daily chart. All right, so this right here, this intermediate cycle advance was the opportunity for gold to give us a breakout above this, and then a really strong push into a final 8-year cycle top. But it was there was again huge attack right here, prevented gold from making a higher high, from breaking above this resistance zone right here, and so the cartel stopped this intermediate cycle. That was kind of a bad sign. And especially when you consider what the dollar was doing. So now let me go over to the dollar chart. All right, so that rally in gold corresponds with this final move down into this 8-year cycle low. Let me check that real quick. Yes, that is correct. And in a natural market, and in an unmanipulated market, gold would have made a higher high here as the dollar made significantly lower lows, and then we get the move down, and then when we get this move into this intermediate cycle low and a retest of this bottom, which again I think if the currencies are the most heavily manipulated markets on the planet, I think if this had been allowed to run to completion, we would have at least got an undercut of this. But this was that rally uh, back in the spring, as the dollar was moving down into that cycle low. But the major consideration was that gold was prevented from making a higher high as the dollar dropped down into this um, uh, what is now is clearly a 3-year cycle low. So we've kind of got a problem in the currencies as well. The dollar is rallying out of this 3-year cycle low. It hasn't even rallied for a year yet. We've got a major resistance zone right here. You can see this on this pivot and this pivot. So at about 94, getting close to 95, um, I'd say there's a pretty good chance that the dollar gets turned back down at that major resistance point, and we get our intermediate decline. But again, we've got a problem. So now I'm going to the weekly chart of the dollar, and you can see this is the 200-week moving average for the dollar. So again, I expect that this resistance, this pivot here, and also the 200-week moving average probably going to stop this intermediate rally, and we'll get our intermediate decline. The problem is that this intermediate cycle is extremely right translated. This past week was week 19. This would be week 18. So that is a strongly right translated intermediate cycle. It's also getting very mature. Most cycles only last, on average, well, they're getting pretty erratic in the currencies, but a normal cycle would run about 22 to 25 weeks. So we've burned up a lot of weeks here. So there's not a lot of time for a move down into an intermediate degree correction. So it's probably, once it starts, it's probably only going to last maybe 4 or 5 weeks, and it could even be as short as 3 weeks. So you would expect gold to rally when the dollar moves down into its intermediate cycle low. And if the dollar just doesn't have very many weeks moving down into that correction, then it's not going to give gold a whole lot of weeks to rally. So now let's go back over to the gold chart again. All right, so here's the next problem with the gold chart. If we assume that this is an intermediate cycle low right here, then we've got a problem. Not only was gold not able to hold above this 10-week moving average, it was quickly knocked back down by an attack of the cartel, and they've managed to keep gold pinned below that 10-week moving average. But the big problem we have is that gold has burned up 8 weeks of an intermediate cycle. If this is an intermediate cycle low, it would actually be better at this point for gold to come down and drop below this August low and negate this as a final intermediate bottom, and then we would reset that cycle count back to week 1, and then we could potentially get a rally that could last, basically however long it takes the dollar to move down into its intermediate cycle low, which, as I said, could be 3 to 6 weeks. So the problem, of course, is that if gold does not come down and break this August low, then we're on week 8, and we've made no progress. We've wasted 8 weeks of this intermediate cycle. We've gone nowhere. And if the dollar rolls over and only takes 3 weeks or 4 weeks to move down to that intermediate cycle low, then you would expect gold to get back above this 10-week moving average. But the odds of breaking above this intermediate top in only 3 or 4 weeks are very, very slim. And that's the only thing that would change the pattern. Like right now, I'm assuming this is an 8-year cycle top. The only way to change that is we've got to make a higher intermediate high. And we've wasted 8 weeks of this intermediate cycle, so the odds now are not very good that gold could come up and break this intermediate top. We might get a rally that makes a marginally higher high above this, let's call it about 1836, and then we roll over again and we start the declining phase of the of the next intermediate cycle and continue the move down into the 8-year cycle low. So we got some problems with the intermediate cycles in gold, and it just, at this point, I'm becoming very skeptical that we can get one more explosive move that takes us above this 2100 before this 8-year cycle tops. Our best opportunity for that was right here, and they stopped that dead in its tracks. And then we had another opportunity anyway. It wasn't a great opportunity because this cycle left translated and made a lower low. So we were already kind of on thin ice right here, but this was a pretty decent rally, just not enough to break this intermediate high and reverse this to a pattern of higher highs. So right now the pattern is still intact. Lower intermediate highs and lower intermediate lows, with the exception that this did not make an intermediate low, but it looks like it's morphing into just a nasty sideways grind, and that's almost impossible to make money in that kind of a market. And unfortunately, I see gold bugs are desperately trying to make money in this kind of environment, and they want to use leverage, and it just doesn't work in this kind of environment. The cartel has, it seems pretty clear to me they've stopped the 8-year cycle advance. They have gold more or less in control. The dollar is rallying. They're probably going to keep this in a choppy market, and then maybe we get our final plunge into the 8-year cycle low. And like I said, I think it's probably going to come in late 22, and at that point, maybe that's when we break below this pivot and maybe come down to 1600 or 1550, and that's our final intermediate or final 8-year cycle low, and possibly something that tests that 200-week moving average. So let me put that back up real quick. All right, so there's the 200-week moving average. You can see we just got stretched way above it, and now we're in the process of coming down and now going sideways, giving this moving average some time to catch up to price. So I'm thinking out here in late 23, we probably test or maybe just a little marginal undercut of that. And then at that point, I think the 8-year cycle decline is over, and then that is when you want to focus probably 80 to 100% of your capital in the metals sector. Now, I'm going to give you the good news. All right, this is silver. And we still have the possibility of a false breakdown here, and once the dollar does start to pull back into that intermediate cycle low, and gold does give us, even if it's only a 4-week rally, we'll get a rally out of silver too. It's just, I don't think there's much chance that we're going to break above this $30 and break out of this sideways consolidation. So I do tend to think this false breakdown is going to give us a rally, but I doubt that it's going to give us the rally that we want. We're probably going to come up here to somewhere between 26, maybe 27 at max, and then we're coming back down again. So the good news is that you've got a year to accumulate, and I've said over and over, trading this volatile sideways mess is probably the recipe for losses. What you want to do while we're in this is you want to accumulate physical silver. You want to stock up on as much physical silver as you possibly can. I'll say it again, $50 silver is going to be a piece of cake. That doesn't mean that it's going to happen tomorrow, and it's not. It's not going to happen as fast as gold bugs want it to happen. It's going to take a while. It's probably not going to come before 2022, but it is going to come during that advancing phase of the next 8-year cycle. And I also think we're going to get the bubble during that phase, and I think $200 silver is the minimum during that bubble phase, and I think there's a good chance we could even get to $500. So if you can take a long-term view, what is better? Is it better for you to accumulate physical silver in the low 20s or maybe even in the high teens in preparation for that bubble? Or do you want silver to come up here to $28 or $30 and then chop sideways, and you have to accumulate at somewhere between $27 and $30 for the run to 200? obviously you're better off in the long run if they keep silver suppressed and give you a chance. They may give you a whole year here to accumulate silver in the low 20s or upper teens, and that is going to make you a lot more money during that next, um, during the final bubble phase, during that next 8-year cycle. So you've got a rare opportunity here. I know we all hate the cartel and the attacks, but if you can take a longer term view, they are doing you a tremendous favor right now, and they're going to allow you to accumulate a lot more silver at lower prices before we start that um, next phase, which should give us the final bubble phase in metals. All right, now in the meantime, I've tried to convince gold bugs. They seem to be very focused on, as I said, on just that one asset class, and in the process they ignore opportunities in other areas. And there are two really good opportunities. I've said several times that I think oil is going to be the next commodity that produces one of those vertical moves like we've seen in lumber and natural gas and tin and coal. And if you look at the weekly chart, it appears to be starting. And oil has broken out above this 77 resistance. I suspect it's probably going to have to consolidate a little bit before it gets above 80 here. But we're still very early in this intermediate cycle. So at this point, I think there's a very strong possibility that oil is going to hit probably the upper resistance target. And let me widen the chart. All right, so here's the first resistance at about, right in here at about $86. So it looks to me like we're heading to that, and we may even get there before this first daily cycle tops. And then the next resistance here is at 91, and then we're looking at 100. So it looks to me like the vertical move is beginning, and I don't think it's unreasonable for this to reach $100 before this intermediate cycle tops. So you've got a really good opportunity here in oil. Instead of focusing on, solely on metals. If you want to play commodities, I think this is where you want to be right now, and give the metals a break. Use this time to accumulate physical silver. But for trading, oil I think is a really good sector to be in now before at least another 10 to 15 weeks before this intermediate cycle tops. And then the same thing for stocks. I think we have to have a final bubble phase, where everybody and their cousin is trading and day trading the stock market. Before this tops, we've clearly got an intermediate decline. It appears to me that the intermediate decline is probably over. So we should have out to February or March before this next intermediate cycle tops. And if we do get that parabolic move, then that would be the end of the bull market, and that's where you want to get out of stocks and then focus pretty much solely on commodities at that point. But we need that final parabolic move. And let me change this to daily, so you can see we've corrected. We didn't quite come down to touch the 200-day moving average, but we never really got stretched all that far above the 200-day moving average either. During the last bubble, the tech stretched about 60% above the 200-day moving average. So I want to see something kind of that looks similar to that before I'm ready to give up on stocks or call a top. So there's definitely two areas where you can make money. You don't have to focus on metals right now. You just use this time to accumulate physical silver in preparation for a really big move during the next 8-year cycle. But right now, if you want to focus on commodities, I would say stick with energy. And I also think you have a good opportunity in the stock market, especially since I think we've probably completed this intermediate cycle low right here.